What is up guys, Joe here back with another video. Today I wanted to cover a quick guide on how to sell Ethereum options on the FTX derivatives platform. So with this covered call method, you're able to earn up to $70, $115, or even $239 per month per one Ethereum token simply for selling an option contract on the open market. So this method is called covered calls, and essentially you as a seller and as an owner of Ethereum can sell a call option to the open market, a buyer, and in return you receive a premium for selling that call option. And the cool thing is you can write this contract once a month, and if your contract does not meet the strike price, then you're able to keep all the premium and the contract expires worthless, and you get to keep all the premium you collected. And then you're able to rewrite the same contract for the next month and continue collecting passive income. So let's say you don't have a whole Ethereum token or a whole Bitcoin token to sell options on. The cool thing is FTX allows you to sell micro contracts on their platform. So for Bitcoin mini contracts, that is exactly 0.01 Bitcoin, or Ethereum, you're able to sell 0.1 Ethereum. This is an easy and straightforward way to collect income on the open market simply for holding your token and letting the asset appreciate over time. So today I wanted to cover a quick guide on how to sell covered calls on the FTX derivatives platform and begin earning monthly premium. Let's get started. So first thing is first, what is a covered call? A covered call is selling a call option on an asset that you already own, covered at a specified price and date. The payment you receive is called the premium. Expiration date, when the option contract expires. This is when the option contract expires. Longer dates equal higher premium. So for example, if you sold a contract 30 days out versus 60 days out, you would collect more premium on the contract that is 60 days out. Think of options as a form of insurance. You sell it for a specified amount of time, and if the insurance is not used, it expires, and the buyer is free to purchase more insurance again for more coverage down the line. The strike price is the price where a call option can be exercised at. So if we see this option contract here we have Ethereum as the asset. The expiration date is 30th of September 2022. The strike price would be $2,000, and the type of call, this is a call option, meaning you are bullish on the asset, and $2,000 is our projected target price, and currently at the time of filming, Ethereum is trending around $1,500. So from $1,500 up to $2,000 potentially, that's about a 25% gain from its current levels. So if we were to write the contract for September 30, 2022, which is in roughly 27 days, and $2,000, here we navigate over to the bid ask, we would collect $70 simply for selling that contract on one whole Ethereum token. And lastly, the definition of a call option is a contract between the buyer and a seller to purchase an asset at an agreed price. Seller has the obligation to deliver the assets if the strike price is met. So with covered calls, for example, if $2,000 is reached by September 30, then you do have an obligation to sell the Ethereum token at the specific $2,000 strike price. But the cool thing is, not only do you get to sell it at $2,000, you also get to keep the premium that was collected. So you also get to keep the $70 that you collected. So again, this is a passive strategy for you to earn monthly income simply for holding your token. But let's say you actually don't want to sell Ethereum at $2,000, you can actually aim higher for a higher strike price, let's say $2,500. But as you can see, for $2,500, you get a lower premium of only $17.90, and if you go even higher, $3,000, you get a option premium of $25. But remember that this is roughly 27 days away. If you scroll lower, you're able to pick other contracts that are 55 days away, 118 days away. So let's say we have December 30, 2022, end of the year. So if we were to pick $2,000, you would net $269 premium, $3,000 would net you $99, $4,000 would net you $75. So specifically, the strike price and the strike date all really depends on your risk appetite. Do you think in the next couple of months Ethereum is going to hit $2,000 or above $3,000? It's really up to you. Personally, looking at the 1 year chart, I do think we will revisit all-time highs by the end of the year at roughly 4,700. We could even break that and go higher, 5,000. Personally, I would only be writing option contracts month to month so I can control my risk here, and I'm able to be more specific on when my strike price might land. I don't know what's going to happen 3 months from now, 6 months from now, so definitely be careful on how far in the future you trade. So now that you're ready, let's go ahead and execute the specific contract of Ethereum on September 30th, 2022 at $2,000. So the website here is derivs.ftx.us, and go ahead and sign up and sign in. Don't forget to fund your account. My recommendation would be to deposit some Ethereum using the crypto wallet address built into the platform. I personally like to use Coinbase or Kraken or crypto.com. And once your account is funded, on the top here you see your available balance, and go ahead and click on the Ethereum tab, and under options you will have your options chain here. And the way to read this in descending order is strike price, so the lowest to the highest. You have your IV, which is implied volatility. That means a metric that measures the likelihood of changes, volatility in the price. Higher IV equals higher premiums. You have your bid and ask price. Essentially that is the bid is the highest price a buyer is willing to pay for your contract, and the ask price is the lowest price a seller is willing to accept for a contract. So bid and ask acts as a range. So for the $2,000 contract, we're at a range of between 41 and 70. The midpoint is usually the sweet spot, but I always aim for the highest contract, which is 70, and I'll start at 70. If that order does not get filled, I'll work my way down and start removing a couple of dollars, maybe roll it down to 65, see if that gets filled. If not, roll it down to 60, and so on. Last is the last contract that was executed at whichever range. So the last contract here somebody executed was at $41. Volume is the total of number of contracts traded for the day. And lastly, open interest is the total number of contracts held by traders as open position. So like I said, I don't think Ethereum will reach back to the $2,000 target within the next 27 days. That's a potential 25% upside from its current levels. So from 1,500 to 2,000, I think that's a relatively safe bet, and this contract would expire in 27 days. So I would just hover over this $2,000 and I would click on ask. This would auto populate on the left hand side here. So remember, 10 micro contracts equals one whole Ethereum. So under my account, I'm able to trade roughly 11 contracts. So for the sake of this video, we're going to go ahead and we're going to choose 10 micro contracts. So 10 micro contracts equals one whole Ethereum, a premium total of 70, and a tiny fee from FTX of $1.50 for this order. And under order book, you can see other recent trades other traders have placed and the size positioning here. So go ahead and click on sell short, verify this all looks correct, and just remember, by September 30th, the expiration date, if Ethereum hits $2,000, you're obligated to sell at $2,000, and you get to keep the option premium on top of that. But if Ethereum does not hit $2,000 by September 30th, your Ethereum collateral is released back to you, and you get to keep your premium regardless. So it's definitely a win-win situation for traders who want to make passive income simply for holding their ETH. So once all this looks correct, go ahead and click on confirm sell short, and the order was received, and we have the order success. We have sold 10 micro contracts for a grand total of $70, and you should also receive an email confirmation once this order passes through. And you can also verify under the FTX derivatives platform under this dashboard and balances in history. But keep in mind, this takes about a day to update, so don't worry if you don't see your order populated immediately. It takes roughly 1 to 2 business days for that transaction to show up. But rest assured, your trade did execute as seen by that pop-up window, and now all you do is wait, and hopefully Ethereum will continue trading sideways for the next couple of days, and it won't reach 2,000 by September 30th. So that was a quick guide on how to sell ETH covered calls on the FTX derivatives platform. This is a straightforward passive way for you to make income simply for holding your assets. I'm super bullish on Ethereum long term, and again, I like to pick a higher strike price just so I have some headroom in case Ethereum does start to pump one day. So let me know what you think about FTX. Are you a fan? Do you like their platform? Let me know in the comments section. So I hope you found this information helpful. If you have any questions, please leave a question in the comment section. I'll be happy to respond. Don't forget to like and subscribe. I'll see you on the next one.